Good afternoon. This is Ron Brown. It's Sunday, October 29th, 2017. It's about 4 in the afternoon. I am home after having been released from the Pamela and Fred Buffett Cancer Center in Omaha. I had stem cell replacement for multiple myeloma, and I feel surprisingly good. I was just released last Tuesday. Just had to spend a few more days in Omaha, and then they let me come home. So I'm trying to ease back into work. What I want to do is I want to look at the market here. I'm going to look at the Nasdaq and the NYSE, and maybe take a look at some of the new features of the newly released HGSI, which I like very much. I love the concept. I like the list concept. I think we can get a lot out of that going forward without having to maintain a lot of data. Anyway, let's bring the NASDAQ up. You can see that I'm in my Major Markets Plus folder under the W&B user groups. And I'm going to click on NASDAQ. And the chart's already there in the background. I'm going to switch charts. I'm going to use the NASDAQ internals under market charts. And I'm going to use my alternate I key to bring up this information. What I want to point out is that even though this market looks like it's going to continue a lot higher and nonstop, that is probably not the case. We do have a huge gap up here, and most of this, or much of this, is due to the very well-known stocks such as Amazon, Apple, Facebook, Google, and so on. But if we look a little deeper, there is some other information here. Now you can see that this is from Friday, and the number of advancing stocks was 1468. The number of decliners was 896, so that is not even 2-to-1 positive. The advancing volume is slightly greater than the declining volume. Number of new highs, of course, is 155, but this is what's interesting here. The ARMS index, anything below 1 suggests a strong buying power, and this is at 1.1369. Now let's go over here and look at these charts. This is advancing versus declining stocks, and you can see that the black is not up here near this area on like we have on really strong days when there are many more advancers than decliners. It's clear down here. And the same on the advancing volume versus the declining volume. It's barely positive. Now this is the new highs versus new lows, and if we look at that from this perspective, you can see that this is in a downtrend. Now here is the ARMS index. Now let's take a look at this same information, and this time we're going to use the NYSE composite, and I'm going to switch charts. I'll use the NYSE internals, which is used with this NYSE composite. Now look at this. I mean, this doesn't look anything like the NASDAQ, of course. Volume was heavy, but once again, if we go in and look at some of this information, advancers were not even 2-to-1 over decliners. Advancing volume compared to the declining volume. Here's the new highs, and the ARMS index is 1.2862 here. So once again, if we go down here and look, of course the volume is heavy, but the advancing issues versus declining issues is certainly not exceptional. The advancing volume versus the declining volume is barely positive, just like on the NASDAQ. New highs versus new lows. You can see it's actually trending down, and the ARMS itself is at 1.2862. Now on the surface, as I said earlier, the markets look very strong, but when we start looking at some of the internals, they don't look quite as strong. Let's take a look at some of the individual stocks here. I'm just going to, why don't we use the top 50 group inclusion report? We'll use the new version here, top 50, call it the HGSI top 50, even though it's the same as the top 50 GIR, which I came up with, I don't know, 3 or 4 years ago. It's been quite a while now. And it's proven to be very useful. Well, I'm clicking on the wrong thing here. Here we go. All right, so these are the stocks. Now, to get this HTML to come up from Friday from the HGSI Top 50 groups, all I have to do is click on this blue icon, and it tells me that Broadcom was the leading group, or the leading stock, by the group count. This is all by group count. It's a semiconductor. Look at the top 3, 4 stocks. The top 3 are devices, and then there's a manufacturer right here. Most of these are going to be W&B, or Woodward and Brown smart groups. These are all filters and combos that I put together years ago. There are some others, Gallardi, Scott, Breakout from Squeeze, and so on, Steckler. But you're going to find that most of them are W&B. Here are M&K pocket pivots. Those are filters I put together for years ago for Gill also. But anyway, that doesn't matter. It's the count is the most important thing, because it shows that these stocks are passing multiple filters. So let's just take a look at Broadcom, AVGO. And I'll just sort by symbol. Fastest way to do it. Now I have to go get a different chart, of course. So let's go into my featured charts. And this is a stock which has been basing sideways for quite some time. It's been a frustrating stock for those who owned it. Now the next earnings due date is 12/14/17, which means that recent earnings are out. I'm going to flip through to the warehouse and notice how it takes me directly to this folder. I was in the W&B market folder, and now I am in the top 50 folder. This time I'm going to move from the top down folder and look at scorecard end of day. Why did I want to go to this view? Because there is a combo ranking attached to it. It is my demand end of day combo, and look what comes to the top of the list now. NVIDIA. Compare that to AVGO, which is now number 5 on the list. This stock is the stock which best fits this combo ranking. So this is why I like to come into a view like this. It gives me a better feel for where the strength is based upon the combo. Now let's look at NVIDIA. You can see that this is a much nicer looking chart than AVGO, because it is showing a series of higher highs and higher lows, and it broke out to a new all-time high on Friday. NVIDIA is one of those stocks which is showing or helping contribute to that NASDAQ candle. But of course, we really need to look at a stock like Amazon, which for some reason did not even make this list. Let's bring it up manually. AMZN. And this is because of an earnings beat. But look at that gap up there. I mean, it's over 100 points. Now, you may ask why we are getting double VPA flags on here. Well, this is an effort to rise, obviously, and then this is an up thrust bar. Why do you get a signal like that? Well, look at this tremendous volume. Do you think that's all buying? No, there's a lot of selling in there too. There's a lot of short covering. It is just a warning sign that this could, everybody could be in that wants to be in. The shorts have covered. It doesn't tell us anything about future market direction. It's just a warning sign. Now you got something similar over here, except this was a negative candle. This was an up thrust bar also. It says a sure sign of weakness, and that was the top of the market. Doesn't mean it's going to be the top here, but you need to be aware of that before, if you had any intention of trying to chase a stock like this. Now, one of the reasons it probably did not come up in the top 50 is because Amazon was actually a pretty weak stock from that point. I mean, it did bounce around. It found support in here. It started to move up here, and then it sold off and stalled here. And then, of course, the big earnings surprise on Friday. So, evidently, that is why it did not show up in the top 50. But that's fine. Let's find out when, well, no, I'm not going to look back and see when it did appear in the top 50 because it hasn't been there recently because of the chart has been so weak. Instead, let's take a look at some of these other stocks here. Let's look at Facebook, for example. Now you can see that this contributed to that big spike up also in the NASDAQ. Look at the earnings growth. I really like the new fonts and so on that Matt and George have implemented in the program. I think it gives it a much more readable look, a cleaner look. It may take some getting used to for some of you. Now let's go down one. Let's go to Alphabet Class C. You can see that here we are. This is another example of well, this just has negative flags on it. It doesn't even have a positive flag, even though this is a huge gap up on a heavy volume. This is a good example of a stock having heavy amounts of short covering and closing well off of its high. And anybody who was buying or covering short up here is now in a losing trade. So that is why these VPA flags are being generated. Now, if you just look at a percentage move on a stock and you don't look at the chart, you don't have any feel for what is going on. You look at this, it says up 4.8% for the day. You think, well, that's a good deal. Well, it doesn't look so good when you start figuring the relationship of the candle to the volume, and it shows that there was heavy selling into this after the short covering was taken care of. It's just very easy if you're already in this stock to take profits when it's had that kind of a move. I do want to point out that there have been multiple bullish VPA flags. Here is a negative VPA flag. Here was a test, didn't hold. Here's a shakeout going into earnings right here. I don't see an earnings due date on this. Let's do this. I'm going to go to bar chart earnings. Here's what I'm looking for. If you go to bar chart earnings off of a chart, you can look down here and you can see the most recent earnings, 957 reported on the 26th. So the earnings are out of the way, and the 26th, of course, was on Thursday. So it had the big up day on Friday, but they sold into it. No, I haven't been able to follow the markets very closely. Obviously, I was in the hospital and didn't feel all that great. I did manage to update my data every day, and that was about it. So I'm not really up on a lot of this. Now here is Netflix. I know the earnings are out of the way. The next earnings due date is in January. Look at all these bullish flags right here, holding above the 18-day exponential moving average, and here it had a nice move up on Friday. I'm going to be spending more and more time on VPA going forward. In fact, for the Insider Club, what I'm going to do is, I don't know how many times a month I'll do it, but I'm going to start making some stock selections, and those selections are only going to go out to insiders, and then I'll track them. I'll put them in a spreadsheet, and I'll share them with everybody after the fact. But with my analysis, I'm going to send them out prior to the market opening the next day, and I'm going to try to be I will be very selective about what I look at. Now, when you select a stock, you've got about a 50-50 chance of it going up. The only thing you can control is your risk, but with the addition of VPA and group movement, group strength in HGSI, those put the odds more in our favor, and I'll get in more into that as I get started. I hope to get something out this week. Anyway, I don't want to spend a whole bunch of time today. I just wanted to try to get reintroduced to all of you, since I've haven't done a lot over the last several months. Anyway, thanks for listening, and there will be more coming soon from me.